What if I told you every single American owes over $110,000, whether they know it or not? The United States is now more than $38 trillion in debt. That's not a typo, that's trillion. With a T. But here's the real question nobody fully understands. What happens if America can pay it back? Is this normal for a superpower? Or are we watching the beginning of something much bigger? Stay with me, because the truth might surprise you. Numbers this big stop feeling real. So let's break it down. $38 trillion equals more than the entire GDP of China. More than the value of every company in the S&P 500 combined. Roughly $110,000 per US citizen. But here's what most people don't realize. The US doesn't owe this money to just one place. Toes, investors, pension funds, foreign governments, and even itself. Yes, part of the debt is money the government borrowed from Social Security funds. That changes the conversation completely. America hasn't always had this much debt. In 2000, total debt was about $5.6 trillion. So, what happened? Three big drivers: wars in Iraq and Afghanistan, the 2008 financial crisis, COVID stimulus spending. And here's the pattern. Whenever crisis hits, the government spends massive amounts to stabilize the economy. That spending isn't paid up front, it's borrowed. And over time, interest piles up. In fact, America now spends over $1 trillion per year just on interest payments. Not on roads, not on healthcare, not on defense. Just interest. This is where it gets interesting. About 70 to 75% of US debt is owned domestically. That means American investors, banks, retirement funds, the Federal Reserve. Foreign countries hold the rest. Top holders include Japan, China, United Kingdom. But here's the twist. China doesn't own America. If China suddenly sold all its US bonds, it would hurt China too, because those bonds are assets. This isn't a simple villain story. It's a global financial web. Technically, yes. Realistically, highly unlikely. Why? Because the US borrows in its own currency, the US dollar, and the dollar is the world's reserve currency. The government can raise taxes, cut spending, print money, or refinance debt. But here's the real danger. Not default. Inflation. If too much money is printed to manage debt, the value of the dollar weakens, and that affects savings, wages, cost of living. We already saw during 2022 to 2023. Inflation spikes. Here's the honest answer. It depends. Debt alone doesn't destroy economies. Japan's debt-to-GDP ratio is even higher than America's. The key question is, can the economy grow faster than the debt? If GDP grows strong, debt becomes manageable. If growth slows, interest costs snowball. Right now, interest payments are rising faster than defense spending. That's what economists are watching. Not panic headlines, not viral TikToks, but long-term sustainability. The real issue isn't today, it's the next 10 to 20 years. As Social Security costs rise, Medicare spending increases, population ages, will tax revenue keep up? That's the debate happening in Washington right now. Not collapse, not apocalypse, but sustainability. So, is America about to collapse? No. Is the debt something that can be ignored forever? Also no. The United States still has the strongest military, the global reserve currency, the largest consumer economy in the world. But even superpowers have limits. And the next decade will decide whether this debt becomes a footnote in history or the start of a financial shift. If